Hey, it's Tyrone Jackson, the wealthy investor, back with another educational video. And there's no question that the year 2019 into 2020 belongs to the number one stock in the stock market right now, and that for sure is Apple. Now, what I want to do in this instructional video is explain to you why I think this stock is going higher from here and whether or not you should own it. So really pay attention to this lesson because I think it'll really help you. Okay, if you're familiar with the wealthy investor approach already, you know that I like to trade stocks that are members of the Dow Jones Industrial Average and the S&P 500. Apple stock is actually in both major indexes. Look at the 5-year chart, which I always refer to as the long-term trend. Okay, I don't want you guessing at stocks. Learn to follow the trend. 5 years ago, these shares were trading around $127 a share. They floundered. There's no other word for it. Even though this is a popular Dow stock, it pays a dividend. It didn't go anywhere. And then what you'll notice if you're just following me on this chart, it was like boom, bang. All of a sudden, the stock took off. It peaked here at around 225 and it just slammed down. Yes, even Apple can have a fall if Wall Street falls out of love with it. This is called retracement, as you know. It's another peak, another slam down. And then all of a sudden, the stock just really goes on a tear. Now, if I zoom in closer and I look at, for example, the 2-year chart, you'll see this slower activity here. Now, a lot of people say, hey, picking stocks in the stock market is sort of kind of like throwing a dart at a wall and hoping that it all works out. And that's absolutely 100% untrue. I've been trading for over 20 years. Now, what moves the stock? Two things I want you to know about. One, revenue. Two, news. What moves the stock? Revenue and news. Do you see how the stock kind of hit a bottom here down at 148? It was like Wall Street fell out of love, and then we had something going on here. During this period, they were just upgrading products, right? And then the stock gave back down here, but right around this period, what happened? They announced innovation again with Apple TV. And Apple TV is their new subscription based service, which you are familiar with. And in anticipation of this future revenue that would come from what we now know is 30 million subscribers, they had 30 million subscribers sign up between this announcement and Christmas. And look at the stock. You see, when I'm always teaching you about how to be super successful in the stock market, you have to follow news and revenue. It's not an accident. So when you see a stock bounce off of $175 a share and then in a brief period of time zoom up, it's because Wall Street thinks the future revenue is going to drive the stock higher, which we now know. Now, I have a saying in the Wealthy Investor Program, you never buy the stock if you don't understand the story. So, the reason that the stock gave back here, lack of innovation, slammed down, announcement, now we're in the streaming game, future revenues, stocks take off. Well, what we learned in 2019 is that in the annual revenue statement that was just given not too long ago, the company made $64 billion in top line revenue. But what drove that growth? Okay? It wasn't the iPhone. iPhone sales aren't really driving Apple, it's something called wearables. Okay, so watches. The public is now in love with these wearables. iPhone sales were okay, but they didn't drive the top line revenue. Do you get it? So we're not guessing at companies. When I'm teaching you step by step what to look for, you have to be able to look at revenues. Here, we saw the stock take off in anticipation of what? Apple TV, but their strongest division that grew the best was wearables. Also, we saw strong growth in this music category. Why? Because now everybody pays $9.95 per month to have unlimited access to their music library. Okay? So, when we're looking at what's driving growth here, we're looking at watches, wearables. We saw growth in the iPhone, but we know the anticipation really comes from what? Apple TV. Now, let me help you out here because I'm talking about whether you should own the stock. 30 million people subscribed to Apple TV in the last quarter. However, most of them didn't pay. They got the first year for free. When that revenue comes in from Apple TV, about 52 weeks from now, what do you think is going to happen to the stock? It's going to go higher. Okay? Revenues drive stocks higher. So what's going to happen? It's going to go higher. Now let me tell you this and really follow me. The problem is the stock is at $318 per share. So do I think you should own it? If you're an experienced trader, right, now's the time to get no more, or if you're an experienced investor, actually, now's the time to get no more than 10 shares. That'd be a $3,100 investment. If you're new to stock market trading, your job is to do what? Is to catch the stocks before they hit what I call the $100 cross. Now, stocks that hit $100 crosses have a lot of institutional involvement. And that's what you and I need. We need institutions to drive stocks. And our main goal here, if we're investing, is to catch the stocks before they hit 318. So if you're just starting out, Apple stock is not for you. Or if you feel compelled to pick up 1 or 2 shares, you have my blessing, right? All right. So what's the lesson I want to leave you with today? We want stocks to be able to pick them up in the Dow and the S&P before they hit $100 per share. What has driven Apple stock over the last 5 years? Lots of institutional money. They sold off until the innovation came back. And what did they do in the last 6 months? They drove the stock higher. So part of being really good and being educated in the stock market is knowing what stocks to own before they cross $100 a share and get that big institutional push that they need. Revenue and news will always drive stocks higher, mostly revenue. But when you have the revenue, you have the news. Does that make sense? Okay. So don't try to follow a lot of strategies that get you rich quick. Follow strategies that help you make consistent choices in the stock market. Now, for some of you, you don't know how to choose stocks. You aren't familiar with the methodology. You could always start your membership with me here at WI Trade School, where I'm constantly covering stocks that are below $100 and sounding the whistle once they go over. Most people who like stock market trading don't have a financial education. Now is your time to get one. So you see the way I just explained earning, revenue, and news? I try to keep the market really simple. That way you have a shot of doing very, very well within a 2 to 3 year period. Okay? So I hope you enjoyed this video. Leave some comments for me if there's anything that you're curious about. But this lesson is about what? Owning not only Apple stocks, but stocks before they cross the $100 mark. That's what I want you to remember. Okay, if you need some help, join me here at Trade School. And I think you'll really, really love the results that come with getting a financial education, not just guessing if a stock is going to go higher.